Yo, what's good? Stu here, Stu TV. I cover all things blockchain, metaverse, crypto, NFTs, all that good stuff. It's coming at you again with another crypto market overview, just breaking the latest and greatest that's going on in the market, but let's get into it. So we can just click and see, we just did in our weekly time chart. We can see that Bitcoin just closed around 59,000. I know it hit high just above 60,000 just for the week, but just continue being the sideways pattern in terms of just zooming out with the whole chart. Obviously, there's going to be anticipation of when we're actually going to finally make a move in anticipation for that. So just eventually, just with time, things will just come over. So like everybody else, market sentiment knows that trajectory is ultimately coming with different events down the line for close out the Q4 of the year. But let's get into our first article. Bitcoin Ether plunged 5% ahead of widely anticipated Fed rate cuts. Soneium's blockchain is growing, with Circle announcing that USDC will be listed on chain. Bitcoin started the week with a 3% decline, falling below 58,400. The drop came ahead of expectations of the U.S. Federal Reserve potentially cutting rates, influencing market sentiment. U.S. listed Bitcoin ETFs saw significant inflows on Friday at 263 million, July 22. Ether ETFs also saw inflows. They're much smaller at 1.5 million. Bitcoin began trading the week down 3%, trading below 58,400 as the CoinDesk measured largest digital assets was down 5%. And then, however, the crypto market slumped on Monday as Asian exchange opened for trading ahead of a key week where traders worldwide expect Federal Reserves to make its first rate cuts in 4 years. So we can actually just scroll down a little bit more. A pivot to the lower borrowing costs is historically by bullish sentiment among traders as a cheap access to money spurs growth from riskier sectors. ETH led losses among majors with a 5.5% drop in the past 24 hours to market's worst day one day slide since early August. Cardano's ADA fell 5%. Solana's Sol lost 4%. BNB emerged as the best performer at a 1.1% loss. So just even all these different losses, I would say the catalyst of just upcoming the Fed rate cuts and then like the anticipations with just different topics, how they issued address with crypto in relation to the election, and then many other catalysts amount just countries around the world, and then ETFs flows coming in, different partnerships, upgrades within different networks. So I think the timing of all these different things together, I think a lot of just big companies are just being able to short the price down to initially get that initial pump up, and this is just a last chance to really accumulate at these prices. Once that run goes up, once the market moves, it really moves up, and just being able to buy, you're going to say shoulda, woulda, coulda, and all these different things. So just pay attention to all these different catalysts. So it's projected that a big pump is soon to come. So we'll scroll down. Soneium may also provide some competition as it continues to be built out. Soneium and Circle announced today that USDC will be offered on the chain, absent for the announcement. So that's very interesting, just coming from Soneium. Actually do a further breakdown just on that, but just a lot to do with the testnet and just different things on how you could just launch tokens. So many different things where I actually know people that's actually using it, interacting with the platform, and people are just wanting to have overall access and potentially benefit from that network. But let's go over to our next article. Bitcoin ticket time bomb. Setup targets 150K by 2025. Bitcoin price technical setups, including a cup and handle pattern, suggest an explosive move to 100,000 to over 150,000 over the coming months. BTC Price classic pattern hits a big breakout. Bitcoin's recent price action shows a confluence of technical indicators aligned with the breakout. The most notable pattern forming on charts is the cup and handle, a classic formation suggestion bullish continuation. This pattern surrounded a subsequent consolidation phase. The handle's formation signals a period of consolidation, often preceding bullish breakout. So you can see in Bitcoin's case, the cup began forming after its peak in late 2021, with the handle currently taking shape as the cryptocurrency oscillates between 65,000 to 69,000 resistance level. So you can see the different trajectory of the line where it just shows you the cup handle, and then once you get on that specific line and trajectory based on its patterns in the chart, that could just lead to just a significant uptick. You can take patterns from lower levels and lower entry points and be able to just see trajectory if it performed just based on previous past behavior. What exactly would that look like and what would land at the target to make those analysis and predictions. But again, not financial advice with any of this, because ultimately no one knows exactly what the market may or may not do. The cup handle pattern resolves when the price breaks out above the neckline, the resistance. As a technical rule, it rises as much as the maximum distance between the neckline and the cup is low point. In Bitcoin's case, price distance to the cup bottom around 15,000 and its resistance at a realm of about now 65,000. That's approximately 50,000. By projecting the upward distance from the breakout, independent analysts suggest a target range of 110,000 to 130,000 for Bitcoin in early 2025. So Bitcoin a ticking time bomb, a series of indicators highlighted. Analyst Nessie points to an impending move to add weight to the cup and handle bullish setup. The macroeconomic backdrop adds further weight to the bullish setup. A rising global liquidity index suggests an influx of capital into risk assets like Bitcoin. This surge in liquidity combined with Bitcoin's tightening price action, described as a ticking time bomb, creates a scenario where a potential breakout could occur, particularly as the market enters October and November. So that'll be just very key months to look for. So just as we get closer and closer, just closing out Q4 to the end of the year, it's going to be that much more to be able to pay attention to. It's going to be that much more intensity as far as how news reflects and catalysts to the price. So much with the crypto and fear and greed index. So many things as far as market sentiment and how that exactly going to look. But those are some predictions. I know those were some predictions that came off last year and last bull run. Obviously, that didn't really go. But in this bull run, who knows? Who knows what the exact line is? Who knows the exact amount and where we're actually going to land? But let's go over to our next article. So Circle partners with Soneium Solutions Labs to launch USDC on Soneium. USDC is a version of a USD coin transferred from its original blockchain, usually Ethereum, to another network. Stablecoin issuer Circle has partnered with Soneium Blockchain Solutions to make USDC a primary transaction token on the Soneium blockchain. This bridge USDC integrates paves the way for Soneium to offer creators and users secure borderless transactions. As a result, the initiative seeks to foster a global-based economy on decentralized technology, Circle said Monday. We're excited to announce our collaboration with Soneium Block Solution Labs to bring Bridge USDC on Soneium via our Bridge USDC standard. This marks a significant milestone to set the stage for a new era of the creativity in the Web3 space. Twitter, we can actually just see, so it shows you where you can read the specific article. So you can click on here, Soneium and Blockchain Solutions Labs enable USDC. It just shows the Singapore. So this is an article that you can feel free to check out, but we're going to scroll through the rest of this article. Soneium and Circle's Bridge USDC integration unlocks new possibilities for Soneium. Bridge USDC, a version of USD coin transferred from its original blockchain. The process involves USD on its native chain and minting equivalent Bridge USDC amount on the new blockchain. The collaboration aligns with our vision of creating a more interconnected official digital ecosystem. So we have Soneium mainnet scheduled for 2025. The partnership comes at the Soneium blockchain subsidiary. Soneium aims to integrate blockchain into Soneium entertainment services, potentially revolutionizing content creation, distribution, and consumption. This includes managing digital rights, fan engagement via NFTs or tokens, content access. The platform allows developers to build apps using Sony's infrastructure, paving the way for decentralized services tied to Sony's product. The mainnet is planned for 2025, though a specific date is undetermined. Currently, Soneium remains in its testing phase. So that is true, it's remain in its current testnet. You can also just check out the Discord, be able to jump in there, ask different questions, be able to talk to people in the community in terms of how you launch these different tokens, how you interact with this platform, and then get resources from there. So that's something that you could also pay attention to going forward. But let's go over to our altcoins for today. So we have Bitcoin at 58,591. And then we have Ethereum at $2,297, Binance at $546. We have Solana at $131, XRP 57 cents, Dogecoin 10 cents, Toncoin $5.52, Shrine at 14 cents. Then we have Cardano at 33 cents. Then we have Shiba Inu WE, Chainlink at $10.64, and Polkadot to round out the top 20. So you can just see all the different prices. Let's go to our trending. So we see our trending for today. We have Nero 621.8% over the last 7 days. Over the past 24 hours, it's up 644.3%. So I know that token is going dumb crazy. We have Nero on ETH. It is down 48.7% over the past week. And then we have Baby Dogecoin up 73.6%. Quebec Turbo Toncoin up 9.0% over the past 7 days. Then we have Casper Bitcoin. Nero is one that if you got into that token, it meme, then you're on a significant pump and a significant high for the week, and congratulations to those people on those gains. Let's actually go to our largest gainers. So we can see our largest gainers again is 0 over the past 24 hours. So I had to see just what catalyst comes with that coin, what's actually behind that. Obviously, just looking at the price, you would just determine, can that actually perform those same like-minded numbers again? That's a very risky move in terms of getting in with an amount of payway. So do your own research, not financial advice. Then we have Black Anguis, Baby Dogecoin, like we mentioned before, under Games OMG Network over 20%. We have Apes, and then Firma Chain up 15.9%. And then we have our top losers: Nero on ETH, Fractal Bitcoin, Tron Bull. So it's an opportunity to actually get in on Fractal Bitcoin if you want access to that token. So just be able to get it at a good price. Tron Bull, Meta, GME, Burn, Cola AI just down 14.5%. And that's just our top winners and losers just going on. But that is our altcoin breakdown just for today. But let's get into our last article. So we have developer shortage in the crypto space is where the real problem lies. So let's read this article. There's a silent threat lurking beneath the surface, a developer shortage. While the crypto world thrives on vibrant communities of traders and enthusiasts, the developers who build on-chain products that drive long-term value are rare. With a robust developer base, crypto's potential to achieve mass adoption is significantly reduced. Most people aren't interested in trade or hyper financial products. They want solutions that make their lives easier, more efficient, and more secure. We need builders who create sustainable, long-term focused products that go beyond short-term hype and speculation to achieve this. For crypto to reach mainstream adoption, blockchain technology must disrupt industries beyond just finance. Here's the brutal truth. Crypto has roughly 1,000 times fewer developers than traditional tech. As 2024, the Electric Capital's developer report indicates 26,037 monthly active Web3 developers globally. In contrast, estimates Evans Data Corporation and International Data Corporation suggest there are 27 million developers worldwide. Approximately GitHub reporting approximately 100 million active developers. This sparking disparity highlights a significant problem. The crypto space lacks the developers needed to build the wide range of applications required for mainstream adoption. So we can read a bit of this. A base has prioritized creating a developer-friendly environment, comprehensive suite of tools, documentation, and resources. Base simplifies this process of building on-chain. The approach has attracted numerous developers, both experienced and junior, who are already working on a wide range of decentralized applications. Base success demonstrates the powerful impact a vibrant developer ecosystem can have on crypto's growth and adoption with more mainstream audience. That's something that I actually just wanted to bring up within this article, is for crypto to get the mass adoption and to mature, especially when the industry is already 10 plus years in. And then you also have to think about, how long does it take for society to actually adopt a new technology, actually have a paradigm shift. You have to factor that there's still a lot of room for newer developers to come in, because we need people to actually build on growing tech and be able to just solve different problems in different industries. Therefore, they have a wider range of how we cast a net and solve and go about our problems in everyday use. And that's the biggest thing that's going to help elevate, is just more developers, people that are actually responsible for building on the chain. But let's scroll down and read the rest of this article. Developer shortage is a real pain. The shortage of Web3 developers stems from several challenges. One major issue is the cold start problem in crypto. It would be easier to onboard new developers if they were already on-chain users. However, to onboard them as users, we need a broader range of apps beyond just financial use cases, and creating these apps require more developers. Another challenge is the perception of risk associated with becoming an on-chain developer. Crypto is still viewed as many as shady, unregulated area linked to scams and market volatility. The lack of job security and clear career paths make it a less appealing option compared to more stable, established fields. Consequently, the crypto industry tends to attract younger developers who have less to lose, while experienced professionals remain cautious about potential risk. To address this developer shortage, the industry has leaned heavily on grants and hackathons. While they are valuable tools, they often result in crypto companies competing for the same limited group of existing crypto developers instead of working together to bring more builders on chain. Hackathons, while exciting and full of potential, they're typically one-off events that don't provide long-term support developers need to sustain their projects. So we have universal builder income is a new way. What if we could offer developers a more consistent and reliable way to make ends meet? This is where universal builder income comes in. UBI, pioneered by Base, coined by Jesse Pollack, represents a novel approach to distributing financial incentives to builders more efficiently. Think of UBI as a regular paycheck for new on-chain builders, one that doesn't require application process, but instead rewards actual contributions and verified reputation. We've already seen this in the early stage of UBI in action. For example, Drip's network, a decentralized toolkit aimed at funding essential software, is exploring distributed financial incentives to effectively scale. For crypto to succeed, we need more builders. UBI offers a way to extract more builders on chain, acknowledging and supporting those who've committed to shipping great software. Providing a safety net, UBI empowers developers to focus on creating innovative solutions without worrying about their next paycheck. UBI can further decentralize the crypto ecosystem, distributing financial incentives to individual builders. We can reduce the reliance on centralized entities and foster a more equitable distribution of rewards. Critics might ask, who funds this? We're already investing substantial resources to attract developers, much of which is wasted on inefficient corporate strategies like employer branding or arbitrage sponsorships. By contrast, imagine a future where a portion of the process of the ecosystem transaction fees automatically support a UBI pool, rewarding those who are actively building for the future of crypto. UBI isn't just about efficiency, it also has the potential to attract more diverse group of developers, including those from unprecedented backgrounds, providing financial incentives directly to individuals rather than startups. UBI fosters a more inclusive experimental environment, unlocking a new way of creativity and innovation. This approach can bring a variety of global perspectives, leading to a more diverse solution and driving crypto adoption in novel ways. Crypto leaders reading this, it's time that you start your own UBI experiments, explore different funding models, evaluate their effectiveness, and share your insights with the community. The more we experiment, the closer we get to realizing universal builder income. The crypto industry stands at a crossroads. We can either maintain the status quo or innovate to create a more resilient and exclusive ecosystem. By supporting builders through initiatives like UBI, we can ensure that the next generation of software creators have the tools and resources they need to succeed. The road to mass adoption doesn't lie with traders, but with the builders who develop the applications and services that integrate crypto in the daily lives of billions. So just wanted to just cover that article. I know it was a mouthful, but just having UBI and just having universal builder income, that would definitely have more of an incentive to bring people in the outside that maybe have experience with a different form of tech or in a line of coding or some type of API integration, where you can also take those skills and be like, how can we pair this with blockchain? And then that's more that we could add to overall just grow and stabilize the ecosystem and still keep the decentralized aspect and just fund it through peer-to-peer. And then also having the financial transactions that actually take a percentage and automatically fund and go into developers is also crucial, because then developers ain't worried about their next paycheck, where is their next money coming from, when is their next gig. So many different things you have to think from the developer standpoint, but this is actually a great read in terms of idea, because this actually gives a reason for developers to actually come on chain instead of just working online with these different Web 2 or just previous industries. How not come into Web 3? And this is a great way on how we attract people and get people in and help people do that. But that is the crypto market overview for the day. Make sure you like, subscribe, comment, make sure you share the video. Stay tuned for all the videos I'm gonna drop, and I'm gonna see you in the next one.